Rotation ran the tape today. Technology led the market higher while energy sank to the bottom of the board, and the S&P 500 still closed in the green. The Nasdaq outpaced everything, up 0.66%, as traders piled into semiconductors ahead of earnings. Two forces set the tone. First, traders bought semiconductor names ahead of highly anticipated earnings reports. Second, oil prices dropped sharply, and that dragged energy producers to the steepest losses of any sector. Risk on for growth, risk off for oil. Let that sink in. This was not a broad rally. This was a rotation day, and the split was impossible to miss. Look at the closes. The S&P 500 finished at 7,677.2, up 0.32%. The Nasdaq Composite closed at 26,151.3, up 0.66. The Dow Jones ended at 53,577.17, up 0.3. And the Russell 2000 settled at 3,005.98, up 0.36%. The sector board shows the split. Technology gained 0.96% and took the top spot. Communication services added 0.76, healthcare 0.34. At the bottom, energy fell 1.65%, consumer staples lost 1.07%, and industrials slipped 0.33%. Say it plain, semiconductors got the bid, oil got the bill. Under the surface, the consumer cracked. Dick's Sporting Goods posted disappointing results and its shares dropped sharply. Walmart and Target fell under pressure too. Consumer confidence edged lower in August, missing expectations. And Canada announced retaliatory tariffs matching U.S. levies dollar for dollar. Meanwhile, bonds caught a real bid. Yields fell 6 basis points across the curve, a second straight session lower. The 5-year to 4.35, the 10-year to 4.64, and the long bond to 5.17. CNBC reports the Treasury could tap its general account to fund bond buybacks, and options traders are piling into TLT calls, betting the bond rout is ending. The bid went further. Gold touched its highest levels in more than 3 months, lifted by Middle East tensions and the buyback news. But Societe Generale warned that a credit slump in China could eventually hit U.S. stocks and urged a defensive stance heavy in bonds and cash. So here is the question that matters. Does the tech rally survive what comes after the bell? Not everything joined the risk-on move. Bitcoin slipped to 78,907.06, down 0.07%. Ethereum fell to 2,461.37, off 0.82. Crypto never got the memo. 3 things matter from here. 1. The PCE price index lands tomorrow, and it could bring fresh clarity on inflation. 2. Semiconductor earnings after the closing bell, the first real test of this tech rally. And 3. Fed Chair Kevin Warsh speaks at Jackson Hole later this week, and his words could reset the rate outlook. 4.64 is the line on the 10-year. Hold below it, and growth stocks keep their tailwind. Lose it on a hot inflation print, and this rotation could reverse fast. Days like this are why a plan matters. At startwiththa.com, you get daily market briefings, real trade setups, and the levels that matter before the crowd sees them. Start your journey at startwiththa.com. The link is below. That's the briefing. Subscribe for daily market analysis from the Traders Agency team. This is education, not financial advice. Trade smart.